with the biggest job revision in U.S. history that just happened today. And so we're really trying to prepare for some of the biggest Fed cuts in history because this is unlike anything that's ever happened in the market. So with that said, this is Josh. You're watching Rager Crypto, Josh Rager, of course. And with that said, we'll go ahead and look at the charts today. We'll talk about some big news as far as BlackRock and one of the biggest banks in the world and what they have to say about the Fed rate cuts for this coming FOMC. So we'll go ahead and get into all that information. How does that impact you? And really just break it down here because we've got some big news as we look at the charts. All right, so let's go ahead and, as always, nothing is financial advice, but you always knew that, right? You always know that. So, hey guys, so Bitcoin overall, what's going on? Well, again, people keep saying the bottom's in, but yet we've yet to see Bitcoin really do anything. Bitcoin continues to go sideways, and we are stuck under 113. And that is the line in the sand there. I want to see it continue to, well, I want to see it break there. And as far as breaking back below, like naturally, I don't want it to, I'd prefer it not to break back below 109. So if it can sustain that 109 area, that would be good for price action. Naturally, if it does break there, it will retest the lows of 107. You just have to understand that that will happen. I'm going to go ahead and zoom in here for you guys. But understand that this is the range that we're currently in, okay? Tapped 107, 103. Of course, we've been making on the lower time frames, as you know, right? Higher lows, which is a good thing, but we continue to just compress here. When I mean compress, guys, I'm talking about how this continues to go higher lows, but this continues to, of course, make this triangle. And so what you end up seeing is this compression of price. And really, triangles are kind of a meme, as I always say, but all that means is that you're going to have compression before some big volatility move, okay? So that's really what that's coming down to. And so perhaps we can expect over the next couple of days for that to continue with CPI and then PPI, the next couple of days. So what is the big news right now? Overall, and unless you live in a cave, you have to understand that we had one of the largest job revisions in history, right? The largest benchmark jobs revisions with minus 824,000 since then, okay? And so basically today was the largest revision since 2009. That's pretty massive, okay? So we've got all these revisions going on, and really what that's doing is it's preparing us for rate cuts, okay? But we've never had anything like this before. And so if anything, that is a positive for rate cuts. In fact, if you have not seen this yet, you got to check this out. So as far as the CIO of BlackRock, Rick Reeder, he actually went on to say that he thinks that the Fed should cut rates by 50 basis points next week. You've got BlackRock, right, saying that 50 basis points, they believe, or at least Rick believes, that he thinks that this should happen here over the coming week, which is a big deal when BlackRock is saying that. Now, not only do you have BlackRock, the CIO, from them, but you also have Standard Chartered expects Fed to cut rates by 50 BPS next week after week job data. And of course, we know that Standard Chartered is one of the largest banks in the world, actually saying that they expect the Fed to cut 50 basis points. So why is that a big deal? Well, it's a big deal because we hadn't priced in or even thought about 50 basis points since this week. And now you've got some of the largest banks and funds in the world saying that the Fed should cut by 50 basis points, okay? Now, not only that, but let's go ahead and see what the FedWatch thinks. This is how people are trading it right now. And currently, I can probably go ahead and let's go ahead, 8%. So people, as far as trading this, believe as far as the Fed, CME Fed Watch, that it's still only an 8% chance. Okay. So that's still pretty low overall as far as the probability of that 50 basis point cut. But you do see traders on other big markets, such as Polymarket, currently up to 15%, 50 basis point decrease in the rates. Okay. 25 basis points, of course, is 80%. No change is 5%. Now, I don't know whoever is on this 5% no change, but I have to say that it's very likely that you're going to lose money. So for whoever's in that trade, I would certainly watch out for that, because it's a very, 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 very high chance, about 100%, that we're going to cut rates in some way or fashion, the Federal Reserve, so at FOMC this coming week. And of course, the only thing that will change that are the inflation data points for Wednesday and Thursday. So those are going to come out the next couple of days, but you have to understand that we're really in a new position here. And so, a lot of people are even talking about this because, of course, the Fed, one of their purposes is to reduce unemployment. And so because of these high numbers in unemployment, that's their dual mandate: lower inflation, lower unemployment, more jobs, better labor. That's what they want to do. But since 2021, that's been what's been going on. And so the issue is that inflation is still here, though, right? So we still have inflation, and the jobs just keep getting worse. But overall, if you think about it, though, over the course of history, apparently unemployment is at a lower point than historically. We're just having bad data as far as the last few years, okay, since 2020, 2021. And the thing about this is that this is really interesting right here. This will mark the first Fed rate cut in 30 plus years, where the PCE inflation, okay, the product cost, is at or above 2.9%. Okay, the Fed will be cutting rates into hot inflation because the labor market is weak. And so, of course, there is speculation that risk asset owners will reap rewards over a period of time. Maybe not initially, as we see a lot of times there's volatility in the market with those rate cuts, but eventually there will be a reaping of rewards when it comes to the rate cuts, as, of course, money printing and more borrowing, which will lead to more risk assets being bought. Now everybody agrees that things are good. Of course, you've got Jamie Dimon, JP Morgan CEO, says that the economy is weakening. And so he basically went on to say that with the job reports, he just thinks that we're on our way to a recession. And so there's a lot of argument right now as well, is that, will that really happen? And is it really as bad as it seems? And of course, you've got the president of the U.S. who's got probably a pretty big ego and doesn't want a recession to happen. You also see the Fed, and you hear a lot that these people in the government, as well as the Federal Reserve, aren't going to allow a recession to happen here in the coming months to years. So, again, largest revision ever in payrolls, but yet inflation is hot. And of course, in the next couple of days, we'll see what happens there. But this is really the first time in history that we've seen the Fed cut rates. And not only when we've got, as far as it goes with this inflation like this, but you also see that the stock market basically at all-time highs, okay? So the market is actually doing really good right now. Now, regardless of what Bitcoin is doing, as you know, in crypto in general, the stock market, which is by far, right, the largest market in the world, is actually doing quite well at all-time highs. So this is really unprecedented, right? One of the biggest cuts of all time. And why we say that is because we've never seen this happen before. We've never seen rate cuts in this type of market environment. So what is going to happen? And really, it's really hard to know, because people will say it's going to pump, people will say it's going to dump it, and really nobody knows. I'll tell you that first. I read a really funny post today by somebody I know, carbon based, but what he says is we keep getting mixed messages. Of course, you've got Jamie Dimon, who says that there's a weak economy, that there's a recession coming. And then you see, Barclays CFO, we don't see any signs of stress in U.S. consumers. So you're getting these mixed signals from everybody. And this is from some of the largest names in the economy, right? Some are saying the polar opposite of one another. And it's even more than what you're going to find on YouTube or Twitter. But you're seeing these guys go back and forth and disagreeing. And so it's just really funny, as the stated quote here. Personally, I think we're entering an environment where the economy is weakening, but it won't make a difference. And risk assets will continue to go up in the face of inflation and bad data, right? Because as far as the data goes, they can just revise it whenever they want, So, but I agree with that it seems like the government right now, the president, and those politicians, as well as the Fed, are dead set on making sure that the markets continue to do well overall. So really, I do believe that we'll reap rewards. This is a massive cut because, again, we've never seen this type of environment of high prices in assets. Gold is at all-time highs, right? Stock market's at all-time highs. Crypto is near all-time highs. Some assets within crypto are at all-time highs. Bitcoin, even though it's pulled back, quite a bit from 124, it's still near an all-time high. It's not like we nuked down 50% over the past few weeks, but it really is interesting to see what is going to happen when it comes to these rate cuts. So, what we're watching for Bitcoin overall, not a lot has changed here. I've went along and I've memed that the bottom isn't in. And of course, if you watch my videos, that's mainly just to troll people. But if you watch my videos, I like to clearly say, you have to take it day by day, and you have to basically put your levels in, because based on what happens with price is how you want to react. And so, again, if Bitcoin is not able to break above 113, there's not really much to get excited about as far as Bitcoin at this point in time. And for the market to continue, at least crypto, to continue to have this type of bull market, we want to see Bitcoin take control again, at least lead for a little bit, and then, of course, come back up to new all-time highs, break that, and to see alts follow and then rally after that, because you tend to see Bitcoin rotation into Ethereum into other majors into lower caps, right? There's always going to be outliers in there, but you have to understand that's what we tend to see when it comes to these types of rotations with the bull market, and I want to continue to see that. But where we want to watch is 113, that. 109, if that breaks, I'm going to see a retest of 107. And again, that could sweep that level and go back up. But again, I think if it breaks 109, it's probably not going to be very pretty. And a lot of this has to do with, again, how is the inflation data going to do? How is FOMC going to do? How is the market going to react to that? And again, with stocks being at all-time highs, definitely having the opportunity to break back down or pull back. Understand that, again, correlation is zero. I show you guys this chart all the time. This chart basically says it's a zero correlation, meaning really what this means, breaking it down, is that if stock market pulls back, Bitcoin and crypto pulls back with it. If it pumps, Bitcoin and crypto doesn't necessarily have to pump. But if the stock market does pull back with the zero correlation right now between Bitcoin and the S&P 500 and NASDAQ, you have to understand that if that pulls back, that crypto will pull back with it, okay? So that's really where we're sitting at right now. And I think it's important to understand, though, that there are outliers within crypto. We've seen Solana and we've seen Hyperliquid continue to do really well. And perhaps you're even in on-chain assets or some majors that are doing really well as far as price action goes too. And there's always going to be those outliers, so trade those accordingly. And when I'm on here and I'm talking about the market, I never want you to think that, well, just because Bitcoin isn't doing very much doesn't mean that other altcoins can't do well. You can still trade those accordingly. But, excuse me, I've had a sore throat today. So I appreciate you guys having your patience, because I had to let that settle down, drink a lot of tea and stuff today in order to be able to do this. So we'll see how my voice holds up. But basically what I'm trying to say is that Bitcoin's going sideways. Stocks could even go sideways, but other assets, Hyperliquid, Solana, maybe even Ethereum could do well. I don't think Ethereum right now. Ethereum looks pretty weak. If you guys are trading Ethereum, I've got the levels right here. Again, you want to see price break above, basically 4,500, 44, 4,500. It's unable to break above this area right here, which is showing some weakness right now. And of course, naturally, if it can break above there, you want to see 4,700 break and hold prior to any retest of the all-time high. But basically, historically, whenever Ethereum hits, these highs like this, it tends to pull back quite a bit. Back in 2021, it dumped 60% from there. So you just have to understand that could certainly happen, and with Ethereum too. It's holding this level of around 4,300. But honestly, what I don't like to see, this type of, it's a lower high, lower high, lower high. I hope it goes up from here, because if not, that's just another lower high. And kind of this ball effect, this, some people say ping pong ball, some people say whatever. But what you end up seeing a lot of times is price just unable to break higher. Even though it does hold a support level, it continues to get weaker and weaker until it breaks. We've seen that so many times in different assets in Ethereum and Bitcoin. So I don't want to, it's what I'm watching. I don't want to see that happen. If anything, ETH needs to keep above 4,200, or it's going to go sub 4,000. And if it goes sub 4,000, there's real possibility to, depending on what the stock market and Bitcoin does, there's a potential opportunity to come back down and head lower at around 3,500. But I don't want to talk about that yet. Let's not talk about that yet. Let's keep it here, 4,200 to 4,500. There's a range right now. Ethereum's looking weak, but that's just what I want to talk about for you guys with that right there. So when pump, man, I think you really have to wait until FOMC. And even that's going to be a very volatile move. So really, we're at a sit and wait point in the market. Now, this is not a boring time in the market. What you do is you continue to look for those assets that are showing strength, and you continue to mark your levels, put in bids. So what I recommend you do, if you haven't yet, is, with Bitcoin specifically, I went into, and this is what you do in these times, is that you go and you place bids at certain areas. And I've said again, that the 105 to 103 area is definitely a very good place to watch. Okay, so I could probably mark that, in here. So around 103 to 105, and placing bids in these areas is something that I personally want to do, because you never know if price does move down. Again, not saying it necessarily moves down, but if it does, you at least have limit bids there to buy. So in these types of sideways price movement, that's what I like to do. But again, people are saying, why are you bearish? I'm not bearish. It's a sideways market. It hasn't shown strength yet. And so you have to trade that accordingly. And again, I am skeptical, though, if we don't pull back, and maybe we'll make a video about this next time, that if we don't pull back, that we could see potentially a market top in Q4. If we do pull back, we have a little bit more reset into things, prices go down, a little bit more accumulation, this pullback lengthens out to like October-ish or so. I think that we have the ability then to run up and go into Q1 potentially to a high. And, I think that's how a lot of people are going to make more money. I did ask that on Twitter. What would you rather see? And if I were to go to my Twitter here and show you guys this, basically, what would you rather have for Bitcoin in the crypto market? If you could choose one, a further dip now in a top in 2026 and sometime, or would you rather see the local bottom in a top in Q4? And for some reason, 65% of people would rather see a top in Q4. Now, I don't know if they're actually saying this is what they think happens, or if they're actually reading the question, what would you rather have? Because for me personally, I want it to dip more, better opportunities to buy, a lot better money opportunities, I think, if it does dip further. Okay, you get dips in both alts and Bitcoin in the stock market. You buy those and you ride those up into 2026. I just don't think you can get any better. That's best case scenario. The other case scenario is that it does not dip, that Bitcoin eventually does break back above this area. Okay, if I were to, go back over here, break back above 113, come back up here to 117, show some strength over time, and then retest those highs, and then eventually top out somewhere. I don't think the top will be as high as what people want if that happens, but personally, I mean, that's what I think will happen if this was the bottom. Now, again, it's pure speculation. Let's go day by day, week by week. I definitely would love to see Bitcoin hit 200,000. There's a real case scenario for that, but let's just take it day by day. Now, for now, this is what we've seen. We know that job revisions have happened. We know that the Fed's going to cut rates, and now more than ever, we're seeing some of the biggest funds and banks call for a 50 basis point cut, which, again, at all-time highs, we've never seen anything like that, which is pretty exciting. And can Bitcoin continue to run up? Can crypto continue to run up? Altcoins continue to run up in that type of scenario? Okay, so that's really what what I want to say. I don't think that the market was really phased today through some of this stuff, because you have to remember again that the job revisions that happened also happened back in, I think it was March. I mean, it was earlier, so you have to understand that it's not new data. And so it's not going to impact the market as much as new data. And of course, new data is going to be the inflation, CPI, PPI, and then FOMC. And that's what really it's going to be based off of, the market movement. So what other questions do you guys have? Anything? I think, some of you guys are, sharing your limit bids. Some people are saying 90, 89K. And could it possibly do that? I mean, it can do anything. And again, out of the question, Bitcoin historically has pulled back quite a bit when it comes to bull markets. And so, currently at 124, we've only pulled back 13%. Again, the 103 to 105 is anywhere between, 17 to 15% pullback. So again, I don't think 103 to 105 is devastating by any means. People are like, the bottom's in, and it could be, but I'm just saying that historically, we're not in a bad place. If it goes down to that 98 to 95 that I've talked about before, I mean, that's only 20 to 23%. Okay. So, I mean, some people are saying 90, that's 27, 28. You don't even get to 30% until 86, 87K. So I'm not even looking down there. There's really no point. Can you put bids down there? Certainly. Sometimes you get these stink bids and the market does this really hard nuke, liquidates everybody who's in longs, and then you can put your limit bids there and catch some stuff, right? But for me, let's see if 109 breaks, and then 105 and 103. And if that breaks, then we'll look lower. Until then, you're wasting your time. Everything else is just sensationalism to try to get you guys to clickbait, okay? We don't need to clickbait necessarily. As far as that goes, I can take a look at Link, and I can take a look at World Liberty Finance. Those are some bigger assets I think that will do well overall, naturally, because, World Liberty Finance, they've got the big backing from the Trump family. And because of that, naturally we see that it can do well. So World Liberty Finance, again, what it did was, of course, we know that World Liberty Finance, now this is the Binance chart with Tether. World Liberty Finance, again, was the key area was around this 21 to 23. Yeah, I mean, it's kind of a messy chart right now. Let me look at the 15 lower time, because this chart, it's not a really old chart. So, when a chart's not old yet, it can be a little bit harder to trade. What we saw here, it seems like this is probably the key area, right? Again, a lot of algos and bots, a lot of people in general tend to trade based on both not only Fibonacci, but the support resistance, moving averages. This seems like this was kind of the area that you want to watch, 21. I think if we can get back above 21, it'll probably hold. Okay, so look for 21 for World Liberty Finance. It had a pretty good run. It nuked because apparently Justin Sun sold, got his coins locked up, and based on that news, it pumped kind of hard to 25, and then it's back down, and it's just kind of chopping around. Let me go to the 4-hour chart. Yeah, I mean, this chart is honestly here. The 4-hour chart, I like trading the 4-hour chart more. But it is in a current downtrend right now, and it looks like it's bouncing off, 19 cents. So, honestly, I like this chart better. So, if price can get above this area, I would probably be a buyer. Again, you can buy here if you want. I mean, everybody's different. But I do believe that if price can get back above 21, 21.8, 22. Okay, let's say that. This was really the level on the 4-hour chart. I like trading the 4-hour chart. It tends to give pretty good levels to watch. 22 would probably be a bullish case scenario. Break above that, I think it continued to go on up, right? I mean, with the Trump family, when there is a bullish market environment, which is not quite yet, but when there is, I expect that World Liberty Finance can do really well, and that if it can break 22 and hold that on the 4-hour, that it'll continue to do well. That's where I want you to watch. Okay. Now, as far as Chainlink goes, Chainlink again has been kind of a strong narrative, and this is the area that I want to watch continuously. Has been this 24.25 to 24.60 area. I've got it zoned out here where I'm watching, and again with this, Link really hasn't been very strong right now. Solana and Hyperliquid have been way stronger for some of these major assets. So, this is one that I keep going back to, and let's go to the daily chart on it. But yeah, I mean, the daily chart, that wick right there is kind of ugly, right? Like, so it goes to show it pumped, and then it's been kind of weak and it's pulled back. But overall, this has been a downtrend right now. So Link is currently in a downtrend. But, I mean, people would probably argue, I don't like to trade patterns, by the way, a lot of times, but people would probably argue that it's putting in a wedge. What does that mean? Again, compression to the downside, and a lot of times what ends up happening is it breaks down more, and then it'll break out of the wedge. So, bottom line, like, Link is in a downtrend right now, so short term, it doesn't really look great. But long term, again, it's been one of the strongest assets prior to late August. As you can see, it run up over the course of July and August. It was one of the strongest performing assets. So yeah, Link overall downtrend, looks like a wedge. So eventually, a lot of times you see those play out. We have seen that unfortunately, that price was bouncing. It is taking into account these daily moving averages, and this is like the 100 and the 200. Okay, so I think with that said, to watch those, I don't think it's going to break down that low, but overall, I would probably bid around this area of 19. I like a lot of times, like when you see confluence and support resistance levels, like this was a prior, resistance to support. It broke through, it held that, and now it's coming back down, and you've got this 100 moving average coming down here that's going to eventually move up. I think that in general is probably going to be an opportunity to buy. I'm not saying that it's necessarily going to go down to 19, but if the market moves down, Bitcoin moves down, stocks moves down, etc., that's your lower case scenario. If you just want to wait for confirmation to buy, just wait for it to break above 24 and then maybe buy there. If you're kind of waiting for it to show strength, I got to see it break $24, $24.50 in order for me to think that it's actually being strong. And that's more on the intraday charts where I want to see it break above there. Okay, so see it break above and then hold that. Of course, it broke above for like 2 candles and then broke back down below it before. But I think next time it breaks above this level, it'll probably keep it, in my personal opinion. So Link, again, short term ugly, longer term good asset to buy. Okay. Yeah, and I agree too. You guys are basically talking about how the stock, this is not good for the stock market. And I think that what's interesting is that nobody has seen this happen before, because we've never really had this type of like cuts, Fed rate cuts in this type of market environment. And so it's really interesting to see. And I think a lot of people that I would respect think that there's going to be a lot of frothy, euphoric, all markets pump in the next 6 months, whether that's only in Q4 or whether that's in mid Q4 to Q1. And so for this just to kind of be the top and just to die off, I mean, it seems interesting because, again, whenever you see tops in markets, people, these funds and these big players, they need exit liquidity. I don't necessarily see that we've seen that outside of Ethereum. What I mean by that is you saw Tom Lee get on CNBC every day and just ETH is going to 15,000, and man, and who knows, like maybe he was long and he was trying to cash out some longs there and it had a bit of a blow off the top. ETH did. But other than that, there really hasn't been anything else to have this type of, pump. If we go look on the daily and the weekly, it's like, dude, this pumped big, and then it's been down 3 straight weeks. But point being is that this is to be expected. I mean, you can't have basically a 3x in the course of a couple of months and not expect that Ethereum is going to pull back. So somewhat of a euphoric blow off the top there. You saw a lot of shilling, right? A lot of the treasury froth, and then people got late. By the time they were buying into the treasuries, it was well above $4,000, almost $5,000, and then they were taking profits, right? And so doesn't mean that the treasuries still aren't buying ETH, but I'm just saying when you have a treasury buying up, you also have individuals also long on the side, all right, or trading on the side. So I'm just saying that was a clear kind of top for ETH short term, but you really haven't seen that in anything else. And the whole point I'm trying to say is that it doesn't feel like a market top. Okay. So yeah, I think we're going to go higher regardless. So I'm definitely not bearish, but for Bitcoin, we didn't have that same type of reaction. We only had around 12% pullback. I mean, again, it just doesn't feel like a market top. We had a swing failure pattern, but other than that, it doesn't feel like a market top. So yes, I do feel like we could see a pullback in both stocks and Bitcoin more. We could. Got to take it day by day. But I think we'll still continue to grind on up eventually. Okay. Yeah, exit liquidity for sure. I mean, it's just how markets move. You guys, when you see, and I'll cut this, it's been 33 minutes, but when you see, people like Saylor and everybody else constantly, saying that Bitcoin's going to 1 million, and you just see a ton of talk about Bitcoin and crypto on CNBC and on the news channels, and it's been a hard run up over the course of weeks or months. When we get there, I mean, that's just clear cut. That's a market top. I don't know where that's going to be. That could even be Bitcoin at 150K. That could be Bitcoin at 200K or more. And so I have no clue where the top is. I think it's going to be around close to 200, but it could top before that. But once we start seeing that type of thing, and we see Bitcoin go into ETH and to altcoins, you see that rotation, and people are just making stupid money, like there were in memes in November, right? That was like a local top. In AI in January, that was like a top. Then Trump coin came out, and then everything nuked. When you see that type of behavior, so whether that's in narratives such as prediction markets or robotics or whatever the next AI, whatever the next narrative is, that's going to be a clear sign. And I'm going to talk about that to you guys, saying, look, things are frothy. I've made some good money, and I'm starting to reduce my position, reduce my risk, and I'll make it known to you guys. Okay, so that's when we'll see the market top. But I think with that said, we've never seen anything like this before, and it's pretty exciting to think about, wow, we are actually cutting rates when markets are at their all-time high. But we'll wait to see what inflation says over the next 2 days, okay? Yeah, euphoria definitely hasn't hit yet for you guys. So just stating that overall. But look, that's just the overall market update, is that we're seeing now that the 50 basis points is up to 16% as far as what bettors are actually betting right now. Of course, Fed Watch is less, it's 8%. With Standard Charter, Rick Reeder from BlackRock, the CIO, actually saying that, hey, they think the Federal Reserve needs to go and cut 50 basis points, and just really pushing that in the market. It's really interesting to see, why are they doing that? And are they doing it because they want people to think that's going to happen and people buy in? or, you know, what's the purpose behind it? There's always a purpose behind these massive banks and these massive funds saying one thing to the media. And so I think what we're going to end up seeing is still a 25 basis point cut, which will be bullish. But, you know, overall, how will that impact the market? We've yet to see. Okay. So CPI, PPI this week, we'll be back next couple of days for that. Again, a video in the afternoon tomorrow, probably, because again, I've see how my throat's doing. I've got like a doctor's appointment to check up in the mid morning. So we'll go ahead and, you know, go and do that in the afternoon. We'll have some more Bitcoin giveaways, another one this week. And so you guys make sure to leave a comment on the video. Always do that. Leave a comment after the video. And just, you know, I tend to pick on occasion from that too. So I want to make sure that you guys are in the running for those. Okay. So with that said, Bitcoin got to break 113. If it doesn't, we're going sideways, right? 109, break of that, retest of 107, potential lower from there. So CPI, PPI is coming out. Guys, we'll have an update in the next couple of days. With that said, that's it for me. So you guys have a great rest of your day. I'm going to go ahead and go back to me. You guys have a great rest of your day. Trade safe, and I